to the third installment of Soluna's AMA series, where we answer questions, some of our audience's most frequently asked questions. And thanks to everyone who has responded to our questions on social media and sent them in today. I'm John Belizaire, CEO of Soluna Computing, and I'm here with Michael Toporek, CEO of Soluna Holdings, our parent company. Thanks for joining me again, Michael.
My pleasure as always. It's good to be back.
Well, it's my turn to ask Michael some
Oh,
questions. This is focused more around just what's happening in the market, the crypto downturn. Another John, maybe the same John, asked this question. Does Soluna have a plan if Bitcoin falls further? You know, People talk about Bitcoin potentially dropping below 20,000. The question is, what would happen at 10,000 or lower?
right.
What say you, Michael?
So what I would say is Soluna had a plan for this when you and I first architected this company. Our
Mm-hmm.
specific plan was to make sure that we contracted power and that was available and that was able to get to a cost of under 3 cents, closer to 2.5 to 2.7 cents per kilowatt hour. The reason
Right.
we picked that was because that was the power price at which, at the bottom of the last crypto winter, one still made money as a crypto miner. So when we're asked what happens and did we plan for this, we specifically architected the company to prepare for this. So the short answer to the question is our plan from day one has been to architect the company's economics so that it can survive and thrive and grow through the entire crypto cycle. That's number one. Number two is a bit of a narrative that those that understand crypto dynamics would understand. So as price goes down, it's typical for hash rate to remain flat or decrease. That improves the mining economics. So if
Mm-hmm.
crypto were to make its way from 20 to 10 over the next to 20,000 to 10,000 over the next month and a half, I would expect that the difficulty or the competition to get Bitcoin rewards would decrease, making mining more profitable because those miners with higher power costs would come off the network. So
Right.
the way I
It's
like
more
to look at it
profitable for the
is
ones that are remaining, though, right?
yes. And so I look at it is
Not for everybody, just the ones that are still on.
it's a relative return game. So
Yeah.
as long as we're top decile or top quartile in power costs, there are many other people that are going to turn off before us, thus improving our own economics. And
Right.
so I would say if Bitcoin dropped to 10,000, we'd continue to remain profitable and make money through the entire part of the cycle. That's what we've engineered this company to do. And very specifically, we could have grown much, much faster had we accepted 4 and 5 cent power. We specifically chose not to do that because we viewed that as unsustainable through a cycle.
Yeah, that's great. Very helpful. And for those of you who didn't follow Michael's comment about the you know price going down and the change in hash rate, there's a great article on our blog we call the Golden Triangle. We'll drop it in the the show notes here, the AMA notes, for you to follow. That'll give you a good explanation of how this all works. I think that's important to make the case that our power cost and our model is designed for both when things are challenging in terms of the asset price and when things are great. Looks like it's your turn to ask questions now, Michael.
I'm
Back to you.
pleased to do that. So, um, as some of our investors are aware, we've closed a project financing deal with Spring Lane Capital.
Hmm.
Do you see, John, Suna doing more of these kinds of deals, possibly in larger sums of money? It would seem like these kinds of equity partnerships would allow Soluna to grow faster. Can you comment on that?
Yeah, that's absolutely our goal is to do more Spring Lane type deals. That's actually was the whole idea behind forging the Spring Lane relationship. We view that transaction with Spring Lane as a model for future execution with more equity type partners. Each of our projects is like a separate company, is the way to think about it. And there's the opportunity to have investors or owners of that project participating in the profit that's generated by those facilities. And we structured something with Spring Lane where we can they can participate in those projects in a series of projects actually, and Dorothy being the first, and we can draw down capital up to a certain amount. So we actually engaged a company called Truist Securities. Folks who are not in the renewable energy space may not know of Truist. They were an incredible investment bank that was built through the merger of BB&T Bank and SunTrust Bank. BB&T and SunTrust merged to form Truist, and inside of Truist is a renewable energy focused investment bank. And we essentially engage Truist Securities to assist the company with our growing pipeline. While there's been Bitcoin price action, there's been lots of action in our business model and how we help these power plants figure out how to solve their wasted energy problems. When we first started out, we would call on most of these companies, and now most of our project opportunities are inbound. So large infrastructure and power plant owners call us. So because we've got this robust pipeline with the ability to build data centers much faster, uh, than other curtailment strategies such as batteries or transmission, for example, that would solve these problems. That's why ERCOT has this issue. Like we can build this power plant, this data center very quickly. So we look forward to our next round of projects beyond Dorothy, and we want to find ways to forge relationships with other companies like Spring Lane, maybe even multiple times the size of them, that can help us to build out these projects and grow our business much faster in a much more scalable way. So we engaged them to basically help us evaluate different options, analyze the project financials, and assess how we can source the right capital for our business going forward. They've been a great partner thus far, and we're pretty excited about the relationship.
What's the timing on that, especially given the current market environment? How do you see that playing out?
Well, we've gotten a number of discussions that are underway with these will be brand name companies in the renewable energy infrastructure space, in the data center space, in the sort of next generation infrastructure. There are a lot of new funds that have been built out to finance businesses that can help with the renewable energy transition. And these are pretty sizable. Our management team has already met with a number of them. These have been very sensitive conversations. So our plan is to start to whittle down the universe of interested parties here in the fall and try to consummate something with folks in that time frame that gets us a pool of capital we could use to finance our growing pipeline.
So I guess putting that together with some of the earlier answers, would they help finance Dorothy or would they help finance other projects? How do you see that playing out?
Both. The way to think about it is they would uh, a lot of these partners, potential partners, are interested in deploying lots of capital, and they want to deploy the projects that are near and ready to deploy that capital.
Okay.
So we're thinking like Dorothy Phase Two, for example, would be a great
Ah,
place for folks to
okay.
deploy capital,
Okay.
and then some of the other projects that we have lined up, like Katie, for example, that is maturing very quickly here, that we can deploy and sort of re-implement our model, but even bigger. And so, because of the fact that they're near-term projects, fairly sizable with great power plant partners, great power prices, we're going to look to the partner that's able to build out a multi-project series with us, kind of like Spring Lane did, but much bigger checks.
Got it.
And that's how to think about
So just to
how we're
clarify,
looking through our process.
Spring Lane has committed to doing three projects, or how does that
Yeah,
exactly work?
yeah, three projects. So Dorothy's the first, and they get to look at our pipeline and see what other projects meet their criteria, and we'll have two more that we can draw down
I see.
for a total of
I
$35
see.
million.
Great.
Mhm.
Super.
That's right.
Thank you, John. Very helpful.
Yeah, you're welcome. All right, it's my turn to ask you some questions, and this will be our final round here. So this is about operations. Just we've put out some goals this year, and we do a great job of putting out these flashes. If folks listening or watching this haven't seen our flashes, go to our website, the investor section, download the flash, and you can see everything that's happening in our business at our project by project level. Soon, when Dorothy energizes, you'll see that, and we continue to do a great job of delivering on our core principle of transparency. Now, Heike asked a question here about that. She's been looking at the flashes, and they want to understand, or she wants to understand, more about the reasons why some of the goals we've put out were lowered recently, and why did we not hit the 1.2 exahash that we had put out there. The 4 exahash goal was reset in our June flash. So maybe you could shed some light on sort of the change in our plan that was published in our recent flash, Michael.
Sure. I would not characterize it as a change in plan. Our plans remain the same. The
Hmm.
environment changed, and we clearly had to react to it. And it was an
So it's
adjustment
more
to
like
the
an
plan.
update.
Yes, an update.
Yeah.
So
Yeah.
there are two specific targets that Heike asks about that I'm going to respond to. The first one is the 1.261. And we are adding some hash rate. We have 500 machines being delivered, so we're going to get closer to the 1.261. But we have a fundamental problem. Um,
Mm.
at Marie, that's a 25 megawatt facility. And
Hmm.
as those of you that have followed us carefully have noticed, we've had, not due to anything we've done, but because of the power infrastructure around us and our power provider, we've had a couple of outages there. So if we max out that facility, it's our judgment that we risk the entire facility. So we've got a
Mm.
handful of megawatts there that technically we could light up, and that would get us to the 1.261, but then we'd be jeopardizing, in our opinion, the entire facility and run the risk of more downtime there. So we've elected not to fully power that up and give our power provider the opportunity to reinforce their infrastructure. So that's just the math around the 1.261. With respect to the rest of
So if
the,
I can play that back, what you're saying is we have the ability to go up to the 1.2, but we're consciously not doing that for technical reasons and safety reasons. Obviously, if there's this
it's
transformer
risk
issue.
return, John. Just
Yep.
risking the 20 megawatts to get a few more petahash, and then you're down for a week while they repair the infrastructure. It just isn't
Right.
worth it to us, especially when
Yep.
we have so much hash rate. We're not hash rate constrained, really. When we've got so
Yep.
much hash rate coming on with Dorothy, why jeopardize that? And so Dorothy, the only constraint around that has been um, completing the ERCOT process. And John and I had a very good dialogue around that earlier in this AMA. And I think you'll see that the company has made tremendous progress getting through that process. And the beauty of that process is there's a beginning, middle, and end to it. And it's my expectation we're much closer to the end than the middle. And we'll keep everybody informed as we make our way through. So the first element of Dorothy is lighting up 20 megawatts, which plus or minus is another 800 um, 800 petahash. And we're expecting to do that in late September, starting to do that and doing that over the fourth quarter. And we will keep everybody posted as we get green lighted by ERCOT to ramp up the rest of Dorothy. So the 4 exahash target will still be achieved. It's just a matter of when that's staged out. And I hope that's clear, John. I didn't want to get too involved in the details.
Right. It's just you're changing the staging given these issues that have come up. but the ability to grow into that hasn't changed.
No, it's
It's
not.
just
The
a question.
opportunity has
It's
not
just a
gone
question
away.
of the
That's correct. And the
right.
economics have
Just a
not gone
question of
away.
timing,
That's right.
and to some extent, the potential growth that we have is probably
But
increased over that
you know,
period of
in
time
in a
because
way, in a way, we've gotten lucky because had we ramped up, we'd be buying or have bought machines, at
right.
30, 40, $50 a terahash, where now we're being offered machines at between 15 and $25 a terahash. So in some respects, we're going to be the recipients of lots of good luck, I'm hoping, as we ramp up the facility and buy our equipment. And that equipment is, for the most part, sitting on the ground here in warehouses in Texas, Ohio, and Pennsylvania, other states that we can get delivery of in a couple of weeks. So, from that
Right.
perspective, investing through the cycle to ramp up these facilities is going to tremendously benefit our investors.
That's fantastic. I think that's a great place to wrap this third AMA of our series here. Thank you to all of you for listening and for tuning in. If you haven't seen the previous ones, subscribe and check in on our other channels here on YouTube and follow us on social if you're not doing so. There's lots of other places to learn about what's happening on the business. And thanks for everyone who sent in their questions. And if you're not a member of our weekly newsletter, please join that as well. You can see a link to subscribe and get the latest on our content and information about what's happening with our projects. Thank you very much for joining us today. And thanks, Michael.
Appreciate it. See you next time, John.